Good morning, everyone, and happy Black History Month. My name is Shagun Idowu, and I have the privilege of being the president and CEO of BECMA, or the Black Economic Council of Massachusetts, which serves as the chief advocacy organization for Black businesses across the Commonwealth. And we're proud to represent the 2,000 Black firms that employ 14,000 Massachusetts residents and contribute over $1 billion to the Commonwealth's economy. I want to welcome all of you to our first On the Mark program of 2021. On the Mark is a regular event that we are conducting for all of our members and supporters and Black businesses across the Commonwealth, where we will connect local, state, and federal policy makers and policy doers to these members and to these businesses to provide important information on relevant topics. We're fortunate to be joined today by members of the Massachusetts Office of the Small Business Administration, Bob Nelson, who serves as the District Director, Nadine Boone, who serves as the Lead Business Opportunity Specialist, and Eli Spahiu, who serves as the Assistant District Director for Lender Relations. Many of you may remember that we started On the Mark about a year ago in response to what our topic is today, the Paycheck Protection Program. When the CARES Act was first passed last year in response to COVID-19, we know that many of you wanted to understand more about this program to support your businesses during this current pandemic. But there was a lot of confusion, and a lot of banks were not accepting many of your applications. And so we heard from many of you that you wanted more information. You wanted to be able to apply and to understand the program and all of its facets. And so we held our first On the Mark with Congresswoman Ayanna Pressley, who was able to share some information on the program. But we were very happy to be joined a week later by the same representatives who are with us today of the SBA here in Massachusetts, who helped each of our members understand every facet of this program and helped them get through the application process and connected to this important stimulus for their business. Very recently, you may have heard that the Biden administration made changes to this program in order to make it more accessible to small businesses like those owned by our members. And so we're happy to have members of the SBA with us today to not only talk about what this reemergence of this program means for your business, but also what these changes mean in your accessing this important lifeline for your business at this moment. So following the remarks of our representatives of the SBA Massachusetts, they're going to share a presentation walking us through the process for the Paycheck Protection Program. Following that, we know many of you gave us questions in advance of this event, and so we'll be going through those questions, but we invite all of you either on YouTube or on Facebook where this is streaming to share any questions that come to mind while this presentation is taking place, and I'll be sure to get to those questions before we end. And want to note as well that if you join us late, if you're not able to stay for the full hour, we are going to make this video, as well as the presentation that the SBA gives, available to all of you through all of our available channels, whether it be on YouTube or Facebook, through our newsletter, or posted on our website. So again, I want to thank all of you for joining us this morning, and I'm going to turn the floor over to Bob and your great team to tell us more about the Paycheck Protection Program.
Great. Good morning, everyone, and thank you, Shagun, for the opportunity to be here with your members. And I just want to thank you for your advocacy on the behalf of small businesses and Black-owned small businesses, and appreciate what you're doing. And you know that the SBA, we're here to support you and your efforts. And when I speak to audiences, I let them know that we're in the business of trying to approve as many loans as possible, and it is always my goal and my team's goal to try to get as many federal dollars into the Massachusetts economy and to help rebuild the Massachusetts small business ecosystem. So we're going to go through this presentation pretty quickly. There's a lot of information, but the deck is going to be made available to everyone, but we want to leave time for enough Q&A for approximately a half hour at the end, so that we can address all of the specific questions that folks have. So Eli, you could start to share your screen and to get into the presentation. But Shagun mentioned the announcement announcement by the Biden-Harris administration and with the PPP changes. And so, some of the changes, it certainly is going to help a lot of small businesses with additional flexibilities in eligibility. So, some of the changes, owners that have query histories, there's greater expansion and greater eligibility. There's also, for those that might have delinquent student debt, you're no longer ineligible because of that. Non-citizen owners, if they're lawful permanent residents, they can use an ITIN and be eligible for a PPP. But the biggest change was for our smallest small businesses, and so sole proprietors, 1099s. There's going to be changes as far as how they calculate the maximum loan amount, with them being able to get additional dollars and additional eligibility. So these changes are positive for the community, and we're looking to implement them as soon as possible. But we know that as of 2/24, the application portal is closed for businesses that have greater than 20 or more employees, and so this 14-week period is intended to try to help the smallest of the small businesses. So many of you that are part of this call today, but as far as SBA, we're all in this. When you look at the Economic Aid Act that was passed, there's a lot of money in there, a lot of new programs and efforts to try to help the hardest hit and the smallest of the small businesses. But I'll first start talking about PPP activity, and I just want you to know that the numbers are really robust. In Massachusetts, this data is as of the 21st. We're over 42,000 in PPP approvals for over $4 billion. Many of these loans are really small dollar loans. So if you are a small business, whether you're applying for a couple $1,000s or $5,000, $50,000, I want to encourage you to apply and to take advantage of this program to try to help you to survive and recover. But as far as all the different money that SBA got, so it's the bulk of it is for the Paycheck Protection Program, $284.45 billion. And Eli is going to talk about first draw and second draw and how you apply, how to calculate loan amounts. But some of the other appropriations that was received was for the Economic Injury Disaster Loan Program and targeted idle advances, but a brand new program to help shuttered venues. So you think of movie theaters, live productions, zoos, aquarium, museums. All of these businesses have been extremely hard hit and challenged. Many of them closed since last March. And but there's also enhancements to SBA's regular loan programs, which I think are really powerful and can be very helpful to help small businesses and the folks who are on this call to get access to dollars to help you with your business and your continued recovery and survivability. But the first thing I'll talk about is the SBA's Economic Injury Disaster Loan Program. So that program is applied for through sba.gov/disaster. So this is not applied for through a lender. It's a direct application with the government. Unlike PPP, where you're hearing businesses are eligible for a second PPP loan, you're only eligible for one economic injury loan. And but we're taking applications through 12/31 of 21, and these are low interest rate loans, 30-year terms, no real property collateral, no personal guarantees. SBA is doing loans of up to $150,000, and it's to get you working capital so that you could meet obligations that you otherwise would have been able to meet had the disaster not occurred. So if you have not applied for an economic injury loan, go to sba.gov/disaster. It is a wonderful complement to all of the other recovery programs that are out there. As far as the targeted idle advance, and I'm going to spend a little bit of time talking about this just because I think it is really important. So previous to this most recent legislation, we were doing economic injury disaster loan advances. They were being calculated at $1,000 per employee up to $10,000 max, but we ran out of money last July. But we received additional appropriations for what's known as the targeted economic injury disaster loan advance. Small businesses don't need to do anything. SBA will be sending an email to those that are potentially eligible, inviting you into the disaster portal to make an application for the targeted EIDL advance. There are two priorities. So the first priority is for a business that previously received an advance. So say you received $1,000 because you had one employee. It was a sole proprietor. If you're in a low-income community and if you've suffered a greater than a 30% economic loss, you're going to be eligible to apply and to get $9,000 of additional money to bring you up to the $10,000. The second priority is going to be for businesses that applied, but we ran out of money, as I mentioned last July. And so again, if you meet the same criteria in a low income area and have a 30% economic loss, you're going to be eligible to apply and to get a $10,000 grant. So these are not forgivable loans. This is an actual grant that does not have to be repaid. There is a mapping tool, so we can get that link to Jessica so that she can send it out, but so that you can put in your address and to see whether you're eligible based upon the geographic as far as being in a low income community. But as far as what you need to do, so as far as substantiating the 30% economic loss, SBA is going to be looking for you to provide monthly cash flows for 2019, 2020, and any full months of 2021. And we're going to be looking at an 8-week period, from 3/2 going forward to an 8-week period prior to that. And, there are so many businesses that are not going to have a hard time meeting this 30% economic loss, economic impact. And so, again, be on the lookout for an email from the SBA. There's a lot of fraud, a lot of scammers out there. So this email would be from an SBA.gov email address. That's how you know it is from us. If you see an email and at the end, it is from SBA.gov. So be on the lookout for that. And again, you need to be real careful with your application because we've been advised that there are no reconsideration or appeal rights. You need to get it right the first time. But I know at the end of this, Nadine is going to talk about our resources to help you. And so I don't want to steal any of her thunder, but you're not alone in this journey. We have folks that can help you with the targeted EIDL advance application. As far as some of the other SBA enhancements, so SBA's regular loan programs, we've been operating them all through the pandemic and this crisis, but there are some new enhancements that are really going to help lenders with the incentive and also help small businesses. So our guarantee is going up to 90%. So it reduces the risk on the part of lenders so that they are more inclined to say yes and to make the loan happen. But there are no fees being charged, so it's going to save small businesses money. And as far as some of the other enhancements, our 504 program, which is for owner-occupied commercial real estate, there's no fees on that program. It is a very attractive environment if you are in the market to get into owner-occupied commercial real estate with our 504 program. But our microloan program is another source of capital for all of you. And we have I think we're probably one of the states that have the most micro lenders of any state in the entire country. So, so if you are in the market for capital outside of our recovery programs, look to the SBA's regular loan programs as a potential source to help you. The last thing I'll talk about is just the Shuttered Venue Grant Program, and that is again, it's for movie theaters, live venues, zoos, museums, and lots of people are anxiously and patiently waiting for the grant application to come out. This is a brand new program that SBA was appropriated $15 billion in order to stand up, but the application is not yet available, but we know that it will be coming soon. It's really important because an eligible entity, they can't apply for a shuttered venue grant and also a PPP. So folks are waiting for guidance and the application to come out for the shuttered venue operator grant before they make the decision as far as whether they go for the SVO grant or for the PPP. So I know I went through a lot of information real quick, and I'm going to turn it over to Eli, who will get into PPP and some great information. Eli, it's all yours.
Thank you much, Bob, and good morning, everybody. Just want to thank, Shagun and Jessica for, inviting us today. It's great to be with you. And again, it is through partners like BECMA that we are able to provide information to small businesses throughout the Commonwealth about the programs available under, the CARES Act, under the Economic Aid Act, my part of the presentation today is aimed to provide you some additional guidance. We'll try to, to hit some highlights of the program, some of the changes as well. But as you all know, the intent of this particular program, the Paycheck Protection Program, was for, from the onset of it with the CARES Act, was for small businesses to obtain a loan that's convertible into a grant. So 100% of the PPP loan should be forgiven, okay? And all you got to do is, make sure that you comply with the requirements of the legislation, and those are some of the points and the topics we're going to cover today. So first and foremost, as you know, with the PPP loan program, at least 60% of the PPP loan amount has to be spent on payroll, okay? And 100% of it could be spent on payroll, and still the loan would be forgiven. But at a minimum, you need to spend 60%. Now, for folks that, are asking the question, what if I don't spend, 60%, I spend 50% of the loan? Will I not be forgiven? So the answer to that is no, that's not the case. If you spend, any amount in payroll costs, that amount is going to drive the total amount forgiven on this program. So generally speaking, you would take the amount of payroll costs, you would divide it by 60%. That's going to give you the total amount of that will be forgiven under the program. So to give you an example, right, a loan of $100,000, to keep the numbers simple, you, instead of spending $60,000 or 60% of the loan for payroll costs, the small business spends $54,000, right? So obviously, you're not going to get the full $100,000 forgiven, but you will be able to get the $54,000, which is the payroll costs, plus, right, other non-payroll costs are forgiven. So the math would work such that you take the $54,000 payroll costs, you would divide it by 60%, okay? And that's going to give you a total of $90,000 that can be forgiven under the program. So the difference of the $54,000 to $90,000 is the non-payroll costs that if spent in accordance to the legislation, will be forgiven. So a total of $90,000 could be forgiven in that scenario, and the borrower would end up with a $10,000 loan at 1% to the PPP lender. Okay. So just wanted to give you that example. That's a common question we receive, and obviously we're going to try to answer as many questions as we can after we go through the program, but I'll try to answer some of those most commonly asked questions as I go through the information here. So one of the things that folks can now choose is a covered period that can be any time between 8 weeks and 24 weeks. So if you want to choose a 10-week covered period, you can. If you want to do 12 weeks, that's up to you, right? You want to do, 100 days even, that's a covered period you can select, and the systems will allow for that. Now, the major improvement that we got, with this Economic Aid Act is that option, for a second bite at the apple, right? The second draw PPP loan application for those hardest hit small businesses. So I'm going to be talking about a first draw PPP loan and a second draw PPP loan in the next few slides. So a second draw would be only available to those businesses that did receive a first draw PPP loan, and they can prove that they were hardest hit by the pandemic, right? They have to show a 25% reduction in gross receipts. A couple of other improvements worth mentioning here is that, under the CARES Act, the program was not too clear as far as how you would treat the expenses claimed for forgiveness. So the Economic Aid Act made it clear that you could claim all expenses, payroll and non-payroll, that you submitted for forgiveness under the PPP loan program. You could claim those as deductions of expenses, right, for your federal tax purposes. So great improvement on the program. Another improvement to the program is the streamlined forgiveness application for loans up to $150,000. So you saw the numbers that Bob shared. The lion's share of all PPP loans is for $150,000 or less. So that's going to simplify the forgiveness process. I do have a slide on that as well, so we'll talk about that. But another great improvement here is that EIDL advance that many small businesses who applied for an EIDL loan in advance received in 2020. That's not going to be subtracted from your forgiveness amount. So under the CARES Act, that was considered a duplication of benefits. Economic Aid Act made it clear that that's not the case. That was not the intent of the legislation, and SBA should not be subtracting those amounts from the amounts forgiven. So a couple of enhancements with regards to the Paycheck Protection, loan program under the Economic Aid Act. So, in addition to the costs related to group health insurance and life, vision, dental, disability, premiums, the non-payroll cost section, right, that 40%, up to 40% of the portion of the PPP loan got some enhancements which are worth mentioning here. So first and foremost, any PPE, right, so any covered worker protection expenses can be claimed for forgiveness, okay? If your business had to pivot, if you had to, if you had any operational expenses that were required for you to stay operational or to basically conduct business during the pandemic, such as the ones mentioned here on the slide, those can be, included for forgiveness. And that's, retroactive. So if you have not applied for forgiveness, again, for a loan you received in 2020, and you had these types of expenses, you can now claim those at time of forgiveness. Okay, so great improvement overall to the program here. Now, we did mention a first draw and a second draw PPP loan. So a first draw, generally speaking, would be a loan that was received prior to August 9th. And for a new applicant, right, a loan that you can apply for and receive now in 2020, 2021. Excuse me, folks. So going back to the first draw PPP loan real quick here. There were some newly eligible entities that can apply for a first draw PPP loan that obviously were not included in the CARES Act. Okay, we talked about the expanded, payroll and non-payroll expenses, the covered period as well. There was, there was an alternative covered period used for forgiveness in 2020, right? So the first two rounds of PPP loan program, that's no longer available at this point in time. So I don't want to confuse you with that. When we talk about a covered period, it's just that. It goes from the disbursement date on the loan out to whatever length of time you're going to choose between 8 weeks and 24 weeks. Okay. Now there are some improvements with regards to those first draw PPP loans received prior to August 9th, right? So some loans that were shortened in a way due to certain errors, right, in calculating the loan amount, will be eligible for an increase in the original loan amount. But one of the major requirements of the program for both first draw and second draw is that the business had been operational, right, and in business as of February 15th of 2020. Now, the current deadline on the first draw program is March 31st, and we don't have any indication that that's going to be extended. So plan on applying if you haven't already before March 31st. Now, as far as increases on those first draw PPP loans approved, prior to August 9th, right? There's only a few types of business entities who would be eligible for that. So not everybody is eligible. That's something that's worth mentioning here, especially if the SBA, if you have submitted for forgiveness and the SBA has paid, right, has remitted a payment on that forgiveness, that automatically disqualifies anyone, even if you're a partnership, a seasonal employer, a farmer, rancher, or a business, right, that falls in one of these three bullets on the slides here. So obviously this is pretty self-explanatory. If any questions, we'll address that a little later, but just want to go through some of the additional information we've got here for you. So obviously, pretty much all businesses that were eligible in 2020 are still eligible for a first draw if they did not receive one, right, before August 9th. But newly eligible entities are the chambers of commerce, the destination marketing organizations, certain eligible news organizations, and housing cooperatives. So if you fall in one of these categories, you will be eligible for both, right? A first draw PPP loan as well as a second draw PPP loan. So a second draw loan, again, as I mentioned earlier, is only available to a business who was eligible for a first draw and received a first draw PPP loan either in 2020 or in 2021. It doesn't matter when, right? But in addition, a business needs to demonstrate that they suffered, a 25% or greater reduction in gross receipts, and obviously they have 300 or fewer employees. Okay, pretty much for all businesses, the maximum loan amount for a second draw, right? So those eligible entities, the most they can get is 2.5 times the average monthly 2019 or 2020 payroll costs. So a second draw PPP loan is, goes up to $2 million, whereas a first draw PPP loan could go up to $10 million. And obviously, not only is there a requirement for the reduction in gross receipts, right, to prove that you're one of the hardest hit businesses, but you have to have 300 or fewer employees, whereas a first draw PPP loan, right, could go, would make a business with up to 500 employees eligible. Now, for many of our businesses in the accommodation and food services sector, we know that you've been hardest hit. So the SBA has made available a higher loan amount, which can be calculated as 3.5 times the average monthly 2019 or 2020 payroll costs. So that was a difference to what we had in the first round of funding. But that's only available, the 3.5 times is only available for a second draw PPP loan. So if you've got, a food service business who did not, take a PPP loan in 2020 and they're applying now for a first draw PPP loan, they can only get 2.5 times for a first draw PPP loan. They can get 3.5 times for a second draw PPP loan. So that's a fairly common question that we receive here at the district office. But keep in mind, there is an entirely different application for the second draw PPP loan, and there are certain certifications, right, that you have to make as a small business owner. So speaking of those certifications, one of them is that you have to certify to the fact that you either have used, right, or will use the full first draw PPP loan amount only for eligible payroll and non-payroll expenses before the second draw PPP loan is dispersed. So, to elaborate further on that, and this is a common question we receive here at the district office, The first draw PPP loan application does not need to be submitted for forgiveness, right? So there's no requirement that that first draw PPP loan has been submitted for forgiveness. You have to certify, right, that you have or will use, right, the first draw PPP loan amount before you can get the second draw loan application submitted, right? And before the loan is dispersed, right, that has to happen. But there's no need for forgiveness on that first draw PPP loan amount. Obviously, as mentioned before, only if you have 300 or fewer employees would you be eligible. And most importantly, you have to demonstrate at the time of the application, right, that you had at least a 25% reduction in gross receipts between comparable quarters in 2019 and 2020. So you have to compare, let's say, the second quarter of 19 to the second quarter of 2020. You cannot compare, the first quarter of one year to the fourth quarter of the other, or any other combination. Okay, now there is some added flexibility there for businesses that were not operational for the entirety of 2019. There is also, some flexibility for businesses that started in 2020, right, and were operational on February 15th of 2020. So you could use as a basis for comparison that first quarter in 2020 and compare any of the other quarters in 2020 to the first quarter of 2020. But keep in mind, loans under $150,000, and many of our lenders are making that option available. We have provided guidance to the lending community that for loans under $150,000, you do not need to show that 25% reduction in gross receipts at time of application, but you must, and I want to stress that, you must provide documentation at the time of second draw PPP loan forgiveness application that you had the 25% reduction in gross receipts. So obviously, some businesses that don't have documentation to show quarterly, reductions, if your tax returns, if you compare tax returns between 2019 and 2020, and you show a 25% reduction for the entire year instead of a quarter of the year, then obviously, that qualifies as well. And us being now in the middle of a tax season, right, I think that flexibility where you don't have to provide, the documentation up front for loans under $150,000 is going to help a lot of small businesses who are in that position and are just waiting to file their tax returns, and instead of showing a calendar quarter, are able to demonstrate the reduction in the calendar year 2020 as compared to calendar year 2019. So application process is pretty basic, pretty simple, streamlined. Obviously, with a PPP loan program, you need a lender. We cannot make a direct PPP loan, so you need to reach out to a participating PPP lender. We've got well over 500 lenders here in Massachusetts, but we do have some tools available. So some of you may have heard of our Lender Match platform. We have made it, available now to the PPP loan program. So, folks can find a lender. You can go back to the lender you received the first draw PPP loan, but for the second draw PPP loan, you don't need to go back to the same individual, individual lender, I should say. So you could go to a different lender than the one you received the first draw PPP loan from. So terms and maturity, there's been some changes, but not a lot from what the program looked like in 2020. Most importantly, now for loans approved in 2021, the interest rate has to be simple interest, so non-compounding, non-adjustable at 1%. Obviously, it continues to be the case that no collateral or personal guarantee requirements are needed for the PPP loan program. No fees, no prepayment penalties. If anything, right, we, the SBA, we're paying lenders to make this program available to you, the small businesses. We're paying them a processing fee. So there's no need for you to pay, any upfront fees, any, agent fees for that matter. Although if you are, using an agent during this round of funding, an agent can only get paid, right, from the lender, not out of the proceeds of the PPP loan. And the agreement has to be in writing before the application is submitted. Keep that in mind. There is a 5-year maturity for PPP loans, and anything approved during 2021 and those approved, after June 5th of 2020. But very important to mention here that borrowers do get a deferment period, which extends 10 months after the end of the covered period. So the PPP loans are all deferred. No payments are required, right, for 10 months after the end of the covered period. The same goes for the deadline to apply for forgiveness. So again, you're granted lots of flexibility when it comes to forgiveness, when you can apply for forgiveness, and so on and so forth. But speaking of forgiveness here, a couple of things worth mentioning again is that streamlined forgiveness application for loans under $150,000. Okay. But that's not to be confused, right, with a blanket forgiveness. It doesn't mean the same. So it is a simplified forgiveness application, meaning that you don't have to submit paperwork to the lender of record, okay, with the exception of the second draw PPP loan, where you need to submit paperwork only for, the reduction in gross receipts. But the fact that you don't have to submit that paperwork to the lender, it does not mean that you don't have to have that documentation on your file, because the SBA may, right, at random audit certain loans. So keep in mind, documentation is not required to be submitted to the lender, still required for you to keep in your loan file. So loans over $50,000, right? So loans under $50,000 are, only subject to the 60-40 split requirement, right? So 60% payroll, 40% non-payroll costs. Loans over $50,000 are subject to both, right? The FTE requirement, so maintaining FTE count and maintaining salaries and wage levels requirement, okay, as well as the payroll versus non-payroll expenses. So that is a very important distinction there that I wanted to make. And again, keep in mind that forgiven PPP loans are not federally taxable income. So they are not going to produce a taxable event for your business, okay? We talked about the idle advances not needing to be deducted from the PPP loan amount. And we also mentioned, right, that the amounts, payroll and non-payroll expenses claimed, right, for forgiveness under the PPP can also be claimed on your tax returns as, expenses to your business. So that's a great improvement under the Economic Aid Act. At this point in time, I'd like to turn over the mic to my dear friend and colleague, Nadine Boone of our district office, so she can talk about the programs we have available under the Business Opportunity Program division and through our resource partner services to our small businesses. Nadine, take it away.
Eli, thank you so very much. And Bob as well. Good morning, BECMA, and to our audience out there. Once again, I, on behalf of the Small Business Administration, am so very, very pleased to be able to speak to you this morning with our partner BECMA, as well as to our most vulnerable Brown and Black small businesses. With all of the information that Eli and Bob shared with you this morning about the coronavirus small business guidance and loan resources, the Small Business Administration asks you, the small business owner, to please consult with your accountant, with your CPA or your lawyer if you have one for your business. And for those of you who are likely to be our most vulnerable Brown and Black small businesses, here is listed our SBA resource partners. These are free services for you to be able to get assistance using SCORE, our Small Business Development Center, our Women Business Centers, CWE, the VBOC, which is the Veteran Business Centers, the Export Assistance Center, or if you're looking at contracting, the Massachusetts Procurement Technical Assistance Center. We have email links here. You would need to make an appointment to virtually have someone to assist you with the documentation that you are going to need for completing your application. You heard Eli mention finding a lender at Lender Match. And so going to the SBA website, I wish you would utilize your local Massachusetts SBA website. All of the information that is in these PowerPoints and in this conversation are there on the SBA website. So talking with SCORE, with MSBDC, with CWE, the Women Business Centers, the Small Business Development Centers, they can help you to get this right the first time. And so for your questions, Eli has just put up another slide here with the update for our newsletter to get 2 pieces of information per month, our calendar as well as our newsletter, and you are able to follow us on Twitter. But one of the things and you can email the Massachusetts District Office with some of your questions. One of the things that I really want to share is these interim final rules and frequently asked questions. They are also on our website. I want to admonish each small business owner to take a look at these frequently asked questions, as well as the IFRs, the interim final rule. And if you are a sole proprietor, or if you are a gig worker, or if you are a nonprofit, use the Control F feature when you look in these IFRs and find what is applicable specifically for you, so that you can have a good conversation with our resource partners when they help you out here. And so these are all the websites there. Now, on this Shuttered Venue Operators Grant, when Bob showed that slide, I don't know if any of you all noticed, but it said that you're going to need a sam.gov profile. So anybody who is in the entertainment industry or performing arts and museum, zoo, or whatever, and perceive that you are going to need to apply for that Shuttered grant, make sure that you go to sam.gov. Please do not go to sam.com. Sam.gov is a free database that you are going to need to register in for you to get that grant. So just remember that you'll need to go to sam.gov. You want to see Uncle Sam's hat on the left-hand side up there. Sam is free. And so we want you to be cognizant of fraud and know that for your SAM profile, you're going to need to have your tax ID number. You're going to need to have a DUNS number. You're going to need to be able to put your banking information and things of that nature in there. It is a requirement, or you will not be able to apply for that grant if you do not have a SAM profile. I think that was the bulk of what I wanted to share with you today. And I think now we can go and open it up for questions.
Well, Bob and Nadine and Eli, I appreciate you sharing all that information. It was a wealth of information for everybody joining us today. And I know we had some questions come in the beginning of the program. So I'm going to ask some of these questions. Some of you may have already addressed, but I know some folks joined a little ways in, so we might be repeating some information, but that's also the point of this, is to repeat the information so it sticks with those who are watching, and we can make sure that they know what to apply for and how to get through the process. So I want to reiterate a couple of things. So it sounds like there were 3 different programs that we talked about. One was the PPP, one was the EIDL Advance, and the other was the Shuttered Venue Operator Grant. Were there any other programs that were discussed today that any viewers that came in late should be aware of?
Shagun, just our traditional SBA loan program. So our guarantee program, the 504, our microloan program, where we've increased the guarantee percentages and have eliminated the fees. So saving small businesses money, but reducing risk on the part of lenders so that they'll lend to small businesses.
Okay. Thank you for that. And as we're going to, I know that the purpose of this forum was to really kind of focus on the PPP, since that is what a lot of our members have been reaching out to us about. And so one question we got last year, and that is coming up again, are for new businesses. And so one of the questions that came in was, can I apply for the PPP if my business has no proof of loss?
So,
and that's for anyone. Mm-hmm.
Yeah, I'll jump in on that. So for the most part, right, the guidance that we currently have available is pretty clear as to what eligibility requirements are, right? So first and foremost, the business can only receive a PPP loan if they were operational on February 15th of 2020, right? So if they were operational, if they started after that date, they are not eligible. The current guidance also speaks to a Schedule C, and I just want to clarify a couple of points here with regards to sole proprietors, because I know we have a good number of businesses that operate as Schedule C filers, whether they're LLCs or sole proprietors. It's very easy to calculate the maximum loan amount on the PPP loan, right? So based on the current guidance, you take the net income of the Schedule C, which is line 31 on the Schedule C, you divide that by 12, right, and you multiply it by 2.5. So you figure out the monthly average by dividing line 31 on Schedule C by 12, then you multiply it by 2.5, which is the maximum loan amount you can receive. Now, those are the changes Bob was talking about earlier at the opening of the program. We're anticipating guidance that speaks to a different method of calculating, the maximum loan amount on the PPP side for those Schedule C filers. And that could be a game changer, because whereas, some businesses, although they were fully operational on February 15th, they had gross revenues, their net income showed a loss. Those were not eligible initially. So that is what changes we're anticipating. We're expecting an IFR, an interim final rule, to come out within days. And that's going to be a game changer for many of our small businesses, who, for whatever reason, right, were just not profitable that particular year, but obviously in business and eligible for PPP otherwise.
Well, we'll certainly be looking out for that rule, and because of our partnership, we'll make sure to receive it and send it out to our members when that information is available. Bob, I didn't mean to cut you off.
Yeah, so Shagun, what the Biden-Harris administration announced, and so as Eli mentioned, we're waiting for interim final rules, and our lenders are waiting for guidance. So what was implemented yesterday was that we're only accepting applications for businesses that are 20 employees or less. But as part of this announcement, whereas it had been net income on the Schedule C filers, what is in the announcement, it's going to be gross income. So it's a big change. And so if a business, they have income and they have revenues, they were operational on February 15th, but they were previously shut out because they had a loss, they weren't eligible. Now we're looking at net at gross income. So this is a big change. So this is something that we're going to be pushing out guidance. There's going to be new interim final rules coming out, but this really is a significant development in order to try to help the hardest hit in our smallest and also our minority small businesses.
Mm-hmm. Yeah, no, these are important changes, and we were happy to hear them on Monday and happy to be able to share this information with our members today. One of the recurring themes, I would say, of a lot of our questions have to do with payroll. This is an issue that we ran into in the last cycle for PPP, and one that I know many are thinking about with this second draw, or just applying for the first time. So we see them in the questions coming in today, and also questions that came in prior to this event, so I'll just ask straight from the chat. Many small business owners do not have payroll, but take a draw based on the cash flow of the business. Can these businesses apply for the PPP? And in your response, if you could also talk about you talked about full-time equivalent earlier, but just the overall, what is needed for payroll? What should business owners be thinking about for payroll as they consider the PPP? Like who's eligible, that type of thing.
So Bob, I'll take this one. Nadine, feel free to chime in. But as far as payroll cost goes, right, the way that the calculation of the PPP loan amount is currently, the guidance currently published, the way it breaks it down is based on the business entity type. So the calculation is different for a partnership that files a 1065 tax return from a corporation that files a 1020S or 1020 form, from a LLC or from a sole proprietor who files a Schedule C, or a farmer that files a Schedule F, right? So that's what drives the maximum loan amount. It's broken down by entity type. So on a partnership, a K1 distribution, if it is reported on box 14A, would be eligible, right, for forgiveness, because it is subject to self-employment taxes. Okay, a owner's draw on a 1020S, right, a S corp, it's not eligible because it's not subject to self-employment taxes. So that is how the current guidance, basically approaches the eligibility of payroll costs, right? In addition to the W-2s and the information and the 941 quarterly statements that borrowers can provide with regards to their W-2 employees, right? Those are the additional line items to look for when it comes to owner compensation replacement, right? So owner compensation replacement is definitely incorporated, eligible to be included up to the limit of $20,833 for a 24-week covered period. Okay, but it all depends how it's been reported for tax purposes by the small business. So perhaps the IFR that Bob and I mentioned earlier, as a result of the latest announcement from the Biden-Harris administration, that will address some of those owner draws as well. But we don't know that yet, and although we're hopeful, that it might, we can't tell for sure because the interpretation of that legislation is just not out yet. So, Nadine, anything you wanted to add?
Thank you, Eli. This is what I was talking about earlier. So there is new legislation that's going to come out, but you've heard Eli and Bob both talk about guidance and these IFRs. Now that we know that we're talking interim final reports, there are, or interim final rules, there are current IFRs and FAQs on the website. As I said, if the small business owner would go in there and start to looking at the structure of their own business and what the eligible use of proceeds and what they will need to consider while we are waiting on this additional guidance, everybody is going to be ahead of the game. As we know, we are in this 14-day window of our smallest, most vulnerable, less than 20 employees being able to apply for the PPP. We have indicated, we being the Small Business Administration have indicated that you can find SBA approved lenders via lender match. And so we just want our small business owners to have a certain amount of confidence and empowerment by looking at the FAQs, by looking at the IFRs, and being prepared when they speak to the lenders or our resource partners.
So, Shagun, we're anticipating this new interim final rule to come out early next week. So, this was just announced by the Biden-Harris administration a couple days ago. I'm sure there are folks in D.C., working with Treasury. We're in overdrive trying to get the new rules compiled and cleared. But this is anticipated to come out early next week. And so as soon as we get it, you're going to get it.
Sounds good. Yeah, and we'll make sure to include that when we send this information out to our members next week. So that's good to hear. We only have a few minutes left, but I want to try to get to some of the rest of these questions in the chat here. Paulo, so actually Nadine mentioned earlier about who's eligible for the PPP. So sole proprietors, nonprofits, small business owners, and I know I just gig economy workers and businesses. So to this question about brick and mortar businesses, you don't have to have a brick and mortar. And so, that based on those categories, you'd be eligible to apply. You can check all the other eligibility requirements. But some of these other questions, do you need to have completed your 2020 taxes? And I'm going to combine some of these. So one question is, do you have to have completed your 2020 taxes? Another is, if my business is registered in Georgia, can I apply in Massachusetts since I live here now? And we can end with this question, again, from new business owners. So they may not be able to apply for PPP since, the February 15th cutoff for 2020, but any other, and Bob, you sort of talked about this at the beginning with some of the other programs that SBA makes available, but kind of steering new business owners in the direction of other opportunities, other funding opportunities, either provided by the SBA or any others that you might be aware of in the federal government that could support new businesses.
So I'll take one of them. So, if your business is registered in another state, you could certainly work with a Massachusetts lender to apply for a PPP. Eli mentioned 500 lenders helping small businesses in Massachusetts to get PPP loans. Many of those lenders were from different markets outside of Massachusetts. So it does not have to, this is a federal program. It does not have to be a Massachusetts lender. So there are large national lenders, there are regional banks, there are small community banks, there are credit unions, fintech companies. There are lots of lenders out there participating in this program and doing applications. So if you're having trouble finding a lender, certainly reach out to anyone on the Massachusetts team, and we can try to help you to try to narrow down where you might be more successful. But Eli, do you want to talk about one of the other aspects?
Yep. I'll take the other question. So one of the questions was, do you need to have completed the 2020 returns, right, in order to be eligible? So as I mentioned earlier, there are two types of PPP loans, right? A first draw and a second draw. So depending which one you are applying for, right, eligible and applying for, you could use either the 2019 tax returns or 2020 tax returns for purposes of calculating the monthly average payroll costs, okay? For second draw loans, for purposes of calculating, the 25% reduction in gross revenues, you need, a profit and loss statement that's signed, by, it can be a company prepared profit and loss statement that's signed by the owner, that can be accompanied by statements for 2020 to show the reduction from 2019 in any particular quarter. But as I mentioned, if the loan is for $150,000 or less, okay, the loan request on the second draw side, you don't need to have the tax returns completed if you're going to use the year-over-year comparison, right? Because you have until time of forgiveness for that second draw PPP loan to submit, right, the paperwork, the documentation that reflects the 25% reduction in gross receipts from, 2019 as compared to 2020, the full calendar year. So yes, the short answer is you don't need those 2020 returns filed.
So Nadine, I talked about our regular loan programs. I know we're short on time, but if you could just quickly talk about our 8A certification program and how powerful that certification can be for small businesses.
So we're talking about federal government contracting. We are talking about increasing revenue. The 8A Business Development Program is a 9-year business development program. It is a certification by the Small Business Administration to federal government buys goods and services totaling about $500 billion every year. 23% of that $500 billion is supposed to be targeted towards small businesses, and 5% of that is for the 8A Business Development Program, also known as a small disadvantaged business. So we do have our woman-owned small business. We have our 8A Business Development Program, also known as small disadvantaged business, the historically underutilized business zone. When Hub Zone, Bob talked about the targeted EIDL loan and those low-income areas and things of that nature. So we have our service-disabled veteran-owned small business, but 23% of $500 billion or so that the government spends every year is supposed to go to small businesses. That is regardless of any ethnicities or anything, total small business. But then we've got the 5% 8A, that 3% Hub Zone, that 3% service-disabled veteran-owned small business, and 5% for women.
Great. Well, thank you, Shagun, for having the three of us as part of this information session, and let us know what we can do to help you and your members. We're here to support. So thank you, sir.
Absolutely, and we appreciate you, Bob, and Nadine, and Eli for joining us today for this session. For those of you who joined us, just another reminder that this video is going to be available on our website, on our Facebook page, on our YouTube page, as a rebroadcast, to watch it again and get all this important information to help your business apply for any and all of these opportunities. And also just want to note a couple of the resources that were made available. So Nadine mentioned Lender Match. So we encourage you to visit sba.gov to see the Lender Match, to be connected with the lender in your area for PPP, but also want to mention the Mass Equitable PPP Access Initiative, which was a group that was started last year as a way to bring lenders, technical assistance providers, and advocacy organizations like BECMA together to connect business owners like you and other minority business owners to not only a lender that will connect them to these important opportunities, but also the assistance needed to help through the application process and answer any questions that you may not be able to answer on your own. So we encourage you to reach out to us at info@becma.org. That's info@becma.org. And we'd be happy to connect you either to our partners at the SBA or our partners in this coalition to ensure you get all of the necessary materials and information you need to successfully apply for these opportunities, and to stay in touch with us so we can make you aware of other funding opportunities to not only help your business stay afloat, but to help you thrive in the post-COVID reality. So we appreciate you all joining us today. Feel free to reach out with any questions or concerns, and we'll look forward to seeing you at our next event. Thank you all.